Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by United Wholesale Mortgage.
Is TRID slowing you down? Not if you're closing with UWM. While other lenders are struggling, we're closing most TRID loans in 15 days or less, thanks to easy-to-use tools like UClose and Ease, and direct communication from submission to close. Get United at UWM.com.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, and this is created exclusively for Mortgage News Network, brought to you by our good friends at United Wholesale Mortgage. Man, they've got so many tools, including webinars on how to help you increase your purchase business. They're a real partner, and you should look them up if you're not already doing lots of business with them. Hey, it's been crazy. We've been warning you about the stock market. You know, earlier on we talked about the fact that I felt that the stock market was vulnerable, and sure enough, look what's happened rather quickly over the past few weeks. If you've been watching the show, you know, and hopefully you've been able to take some action to protect yourselves. Well, either way, many of you are probably worried about what does this mean? What does this mean for, obviously, for your stock portfolio if you're in the market? And certainly, what does it mean for interest rates? Well, interest rates look to be in the catbird seat right now. We see that 10-year Treasury right around 2%. It seems to me that there could be some room even for it to move a bit lower. The key really lies within the stock market. The economic data has been dismal. We see no inflation in sight. We also have seen that the manufacturing sector is struggling, profits not doing very well, revenues relatively flat. The Chinese stock market is in bear market territory. And we are worried a little bit about where our stock market could go from here. Now, there's a couple of important levels that we're near that could sort of put a floor underneath us, and maybe stocks can stabilize from that area. Now, this is different now because in the past we've seen the Fed there to kind of bail out the stock market during those down times, and it almost always went up. With the Fed now in a perhaps tightening mode, I don't know how much they're going to tighten, especially with conditions the way they are right now, but they've already began raising rates back in December, and maybe not as eager to go ahead and cut rates again that quickly, certainly not as eager to add quantitative easing as they had in the past. We're in a position now where the stock market really needs to stand on its own. The stock market's kind of almost been rigged a little bit because interest rates have been kept artificially lower. In fact, if you saw the great movie The Big Short, Michael Burry, who was played by Christian Bale, that kind of savant who had Scion funds and kind of saw things ahead of time, he's really worried about the level of debt and something that's not really talked about, right? It was so funny. It wasn't that long ago. I remember the big deal was the media would constantly talk about the national debt and the debt clock and debt. Well, I don't know, and I don't want to say things politically or not, but you'd wonder if there's some political bias out there because we haven't heard anything about that for a long time. But yet the national debt in the last 7 years has gone from 9 trillion to 20 trillion without anybody talking about it. Michael Burry is talking about it, and he's worried about debt. In addition to that, we are seeing that the interest rate environment, according to Michael Burry too, is fixed, and that's something that is not allowing the markets to behave normally. So what does this all mean? Well, I think some of the charts will help illustrate this and seeing where we could potentially find a bottom, and then if we don't see a bottom there, where things may go, starts to get a little bit scary. Okay, so for right now, the 10-year Treasury just above 2% is a good thing. When we look at the S&P, and as we record this, it's at 1880. This is an important level. You may recall we talked to you about the fact that 2015 wasn't that long ago, just a couple of weeks ago in the show. We said that this was a very important level, and why this level, if broken, could lead to much lower numbers on the S&P, and even mentioned 1821. I know many of you had sent emails saying, is that even possible? Could that even happen, go from 2015 to 1821? Well, we're not that far away from it anymore. So we break this level and look at the precipitous drop we've seen in the past couple of weeks. And even this level, 1895, not really holding. I want you to watch these numbers. 1868, which is the low that we had seen here. Well, let me draw this line a little better for you. This 1868 number, if this level holds, we could actually bounce here and then see if the market tries to stabilize or regain its footing a little bit to the upside. But that's an important level. If that level is given, it seems to me we almost assuredly would drop to 1821. Now we break below 1821, and what happens from there? Well, it really starts to get kind of ugly from there. We'd have to go, much further back and see if we can't kind of come up with a level that is lower than that. It is certainly a level that's much scarier. Again, this 1821 does appear to be an important line in the sand. So for right now, obviously, watch the markets carefully. If prices do continue to decline on the S&P, the beneficiary will be interest rates. You will see better pricing, better interest rates. However, I'm sure that that's something that is a good thing for business, but we don't want to see the American economy struggle. So we'll be watching this. We'll be reporting this to you. And if you want to get this information every single day, have something to talk about to your customers, and be on the cutting edge, obviously for your own personal net worth, and of course to advise your clients, be a better resource for them. I mean, look, in 2016, you can't just parrot information, okay? Millennial buyers, they grew up with Google. They've got a phone in their hand that gives them information quickly. What you need is insights, and you need wisdom. You want to get that? Sign up for MBS Highway. Promise to give that to you every single day. Rise above your competition. Rise above these automated mortgage types and be of value. If you have and give value and knowledge and expertise, you're always going to be in demand. Invest in yourself. Invest in your customer. Isn't it worth it? Click on the free link to get started and then sign up, will you? Talk to you soon. Bye-bye.
Today's Master of the Markets was brought to you by United Wholesale Mortgage.
At UWM, our AEs receive over 500 hours of training each year to keep you current with the industry. We give you direct access to your own team of underwriters who return your calls in 3 hours or less. And we provide exclusive products and tools that give your business a competitive edge. In fact, everything we do at UWM is dedicated to championing your success, which is why more brokers choose UWM than any other lender. World-class service, exclusive products, groundbreaking tools, and you. Get united with us at uwm.com.
This is Mortgage News Network.